Hello students, how are you all? Are you fine? I am also fine and I hope you are also fine. Today I am going to discuss regarding to the income from capital gain computation. How the income tax is how the capital gain is computed under section in various types of income tax provision. How the long-term capital gain is computed, how the short-term capital gain is computed. So, dear friends, in previous class, we had discussed about the pro forma of the long-term capital gain, short-term capital gain, section 11111A, 112, 112A. So, dear friends, in this class, in today's class, we will elaborate regarding to the computation of capital gain, regarding to the amendments, present amendments under the Finance Bill 2024. So, dear friends, with this hope, you would be taken each and every point regarding to this class. So, first, I am going to discuss with the help of the case second. In previous class, we have discussed the computation of capital gain with the help of case first. With the help of case first, I have discussed how to compute the capital gain regarding to the depreciable asset, regarding to the short-term capital gain, regarding to the long-term capital gain. Now, today class, again, I am elaborating the case second. In the case of second, the case is Mr. M purchased 100 equity share of Messrs. G Company Limited on 1st April 2008. At the rate of rupees 1000 per share in public issue of the company by paying security transaction tax यानी STT. मतलब मिस्टर एम ने परचेज किया 100 इक्विटी शेयर्स, रेट 1000, तो 1000 इज इंटू 100 इज इक्वल टू 1 लाख. तो 1 लाख हैज बीन पेड बाय मिस्टर एम फॉर गेटिंग द सिक्योरिटी ऑफ द मेसर्स जी एंड कंपनी विद पेइंग द सिक्योरिटी ट्रांजैक्शन टैक्स यानी STT. कंपनी अलॉटेड बोनस शेयर. Company allotted bonus share in the ratio of 1:1. 1:1 means the share 1000 is got by the Mr. M and now company is allotting bonus share 1:1 ratio. So it means company is allotted 1000 bonus share also to Mr. M on 1st December 2023. He has also received dividend at the rate of rupees 10 per share on 1st May 2023. Mr. M has sold all the shares on 1st October 2023 at the rate of rupees 4000 per share through a recognized stock exchange and paid brokerage 1%. Brokerage 1% means processing fees and security transaction tax .02%. 0.02%. So it is required to compute his total income and tax liability for the assessment year 24-25 if Mr. M pays tax under default tax regime, assuming that he has no income other than given above. Fair market value of share of Messrs. G and Company Limited on 31st March 2019 is rupees 2000. So, dear students, shares is purchased on 1st April 2008 and fair market value of such types of asset is rupees 2000 on 31st January 2019. So how this case is solved? How this case will be solved? So I am presenting with the help of this slide regarding to the computation of capital gain. So computation of total income and tax liability of Mr. M for the assessment year 25-26. Long-term capital gain on sale of original share is written. Gross sale consideration 4,000 into 100. 4,000 into 100 means 4 lakh. 4,000 into 100 means 4 lakh, and 1% brokerage is paid. 1% 4 lakh का 1% 4,000. 4,000 will be deducted out of 4 lakh. So then finding value will be treated as a net consideration rupees 3,96,000 less cost of acquisition. Cost of acquisition is rupees 2,000. 2,000 2,000 into 100 is equal to 2 lakh. So long term capital gain rupees 1,96,000. So 1,96,000 is long term capital gain. The such types of long term capital gain is computed with the help of this formula: cost of acquisition, brokerage, and gross sale consideration. So dear students, short term capital gain on sale of bonus share. Sale of bonus share. So dear students, sale of bonus share gross sale consideration 4,000 into 100 is equal to 4 lakh. Brokerage 1%. तो 4 lakh का 1% 4,000. तो next consideration 3,96,000. And in the case of bonus share, no cost of acquisition is paid because bonus share is given by the company without any cost. Without any cost. So then cost of acquisition will be nil. So short term capital gain will be rupees 3,96,000. Income from other sources is nil. Dividend received from Messrs. G and Company, it will be taxable in the hands of the assessee, Mr. M. So 3,96,000 plus 2,000 and preceding 3,96,000, it will be 1,96,000 plus 3,96,000 plus 2,000, it will be 5,94,000. This will be called total income. This total income is computed like this types of manner. So dear students, if you talk about the tax liability, so in the case of computation, in the case of capital gain, the tax liability will be computed on the basis of flat rate, not a slab rate, not normal rate. So tax on dividend, since it is lower than the basic exemption limit, the basic exemption limits, it will be less than basic exemption limit, so tax on dividend will be nil. Tax on short term capital gain, 111A at the rate of 15% of rupees 3,96,000 minus 2,98,000 being adjusted basic exemption limit will be 14,700. And tax on long term capital gain 112A will be 10%, 1,96,000 minus 1 lakh will be 96,000, 10% of 96,000, 9,600, and total amount of the tax rupees 24,300 less rebate 40,700 regarding to the tax on short term capital gain. So it will be 9,600. Health and education cess HEC will be computed at the rate of 4% of the tax to 9,600. 4% of 9,600 will be 384 rupees. So then 384 plus 9,600 will be 9,984. So dear student, this will be tax liability regarding to the computation of capital gain, regarding to the long term and short term capital gain. So dear students, now it is an important point, it is a notable point. Long term capital gain exceeding rupees 1 lakh on sale of original share through a recognized stock exchange in which security transaction tax paid at the time of acquisition and sale is taxable under section 112A at the concessional rate of 10% without indexing benefit. Dear students, cost of acquisition of such equity share acquired before 1st Feb 2018 is higher of cost of acquisition rupees 1000 per share and lower of fair market value of such, that is 2000 per share and full consideration rupees 4000 per share. Therefore, the cost of acquisition of original share rupees 2000 per share. Okay, dear student, this is a very important notes regarding to the computation of the capital gain. Dear students, next point, important point is, since bonus share is held for less than 12 months before the sale, the gain arising therefrom is a short-term capital gain chargeable to tax at the rate of 15% as per section 111A. After adjusting the unadjusted basic exemption limit rupees 3 lakh less than rupees 2000 being the amount of dividend, since Mr. M is paying tax under the default tax regime, he is entitled for a basic exemption limit rupees 3 lakh for assessment year 24-25. Next notable point, important point is, brokerage paid is allowable since it is an expenditure incurred wholly or exclusively in connection with the transfer. Hence, it qualifies for deduction under section 48 subsection Roman 1. Next notable point, it is also important point, cost of bonus share will be nil as such share are allotted after 1st April 2001. And next notable point, security transaction tax is not allowable as a deduction. So dear friends, these are the important point at the time, a point which is taken place at the time of computation of long-term capital gain and short-term capital gain. Dear students, now with the help of another case, I am going to discuss the another computation of capital gain. The case is, Mr. A converts his plot of land purchased in July 2004 for rupees 80,000 in stock in trade on 31st March 2023. The fair market value as on 31st March 2023 was rupees 3 lakh. The stock in trade was sold rupees 3,25,000 in the month of January 2024. Find out the taxable income, if any, and if so, under the head of income and for which assessment year. Cost inflation index, financial year 2004-5 113, financial year 2023-23, 22-23 331, and financial year 23-24 348. The question is, Mr. A converts his plots of land in stock in trade for rupees 80,000 and such types of plot fair market value as on 31st March 23 rupees 3 lakh, and stock was sold for rupees 3,25,000 in January 2024. So how and in which types of way it will be calculated? This will be this is presenting with the help of this slide. Capital gain, full value of consideration rupees 3 lakh. Interest cost of acquisition in which year the asset is acquired, it will be divided and it will be multiplied in which year index when it is transferred or sold. So interest cost of acquisition rupees 2,34,336. So then long term capital gain will be 65,664. So next, this when the stock is converted, plot is converted, land is converted into stock in trade, it will be treated under the head of income from business and profession. Sale price of stock in trade 3,25,000, fair market value of such types of stock at the date of conversion rupees 3 lakh, so then 25,000 will be treated as a income from business and profession. So dear students, it is my humble submission before all of you. When any stock is converted into the, when any land is converted into the stock, when any piece of land is converted into the stock in trade, so such types of conversion will be treated as a income under the head of business and profession. So dear students, these slides represent the such types of provisions which are very important at the time of computation of capital gain, at the time of computation of long term or short term capital gain. Conversion of a capital asset into stock in trade is a transfer within the meaning of section 2 subsection 47. In the previous year in which the asset is so converted, however, the capital gain will be charged to tax in the year in which stock is sold. Okay. Second important point is the cost inflation index of the financial year in which the conversion took place should be considered for computing indexed cost of acquisition. Further, the fair market value of the date of conversion would be considered full value of consideration for transfer of asset as per section. And again section 45 subsection 2, the sale price less than the fair market value. The sale price less than fair market value on the date of conversion would be treated as a business income of the year in which stock in trade is sold. In which year stock in trade is sold, not converted year, when it is sold. Next notable point, therefore, in this problem, both capital gains and business income would be charged to tax in the assessment year 24-25. Today, student, with the help of this discussion and these provisions, we are trying to discuss about the provisions of the capital gain. Dear student, there are some types of amendments which are taken place under the amendments to Finance Bill 2024. Earlier, government removed the indexation benefit on the sale of immovable property. However, the amendment of Finance Bill 2024 introduced a rollback of this rule. As per the latest amendment, for any immovable property acquired before 23rd July 2024, before 23rd July 2024, because in this year 2024, in the year of 2024, when government was presented the finance bill under the budget head on 23rd July 2024, the government framed a rule as per the latest amendment for any immovable property acquired before 23rd July 2024. The taxpayer will have the option to choose between the long-term capital gain computation method. So, under this, there are two types of option. First, the rate of tax on long-term capital gain will be 12.5% without any indexation. Without any indexation. And with indexation, the rate of tax as an old rate means 20% with indexation. This is a new amendment. If any person, if any assessee opt any capital gain without any indexation, so this will be 12.5%. And with indexation, the rate of tax will be 20%. This is the amendment. Dear student, however, there are some certain exception to this amendment. Amendment means the government has been amended without indexation and with indexation. Without indexation, the rate of tax on long-term capital gain will be 12.5%, and with indexation, the rate of tax will be 20%. But these amendments having some exceptions, and there are three types of exceptions, dear friends, dear students, with 3 exceptions, having the 3 exceptions. First, indexation benefit will be available only for immovable property. Indexation benefit will be available only for individual and HUF SSC, not company or firm SSC or any other SSC. And it can be considered only for tax calculation and not for determining amount of the investment or less to claim exemption or carry forward. These are not available for this segment. So dear friends, these are the some exceptions, some 3 types of exceptions with under the amendments under the Finance Bill 2024. In the case of long-term capital gain, exception in the case of long-term capital gain, exemption on long-term capital gain has been increased from rupees 1 lakh to 1,25,000 per annum. Before, the exemption limit was 1 lakh, but after amendment, the exemption limit rupees converted from 1 lakh to 1,25,000. And the long-term capital gain rate on all financial as well as non-financial assets has been increased to 12.5%. This is the amendment. This is a amendment which is given under the Finance Bill 2024, Finance Bill 2024. So dear students, in the case of short-term capital gain on specified financial asset will be charged at 20%, and some specified financial asset is also given which types of financial asset will be treated as a specified asset, and such types of financial asset which is a card according to the provision, according to the rules, according to the amendment rule, the rate of tax will be 20%. Short-term capital gain on other non-financial asset will be taxed at applicable slab rate. Applicable slab rate means optional tax regime and default tax regime. In the case of optional tax regime, the slab rate 5%, 20% and 30%. And in the case of default tax regime or new tax regime, the slab rate 5%, 10%, 20, 15%, 20% and 30%. Okay. Unlisted bond and debenture, debt mutual fund and market linked debenture, irrespective of holding period, however, will attract tax on capital gain at applicable rate. Applicable rate means under old tax regime means optional tax regime, and under default tax regime. So dear students, with the help of these types of amendments, with the help of today's discussion, I am also able to say which types of amendments are taking place after 23 July 2024, and such types of amendment is given under the Finance Bill 2024. So today class we will discuss about how the long-term capital gain and short-term capital gain is computed, and how to applicable the new amendments regarding to the long-term capital gain, regarding to the short-term capital gain, and regarding to the various types of provision of security transaction tax. So dear student, I hope you have got each and every points regarding today's class. Any confusion, contact without any hesitations, So thanks to all of you for your nice listening and cooperation.